You're watching Deal Flow, the show that tracks merger and acquisition activity in Africa and beyond. It's the world of investment banking, corporate takeovers and private equity deals on your screen. I'm Erica van der Merwe. Africa's strong economic growth and the promise of much more is creating a dynamic and increasingly competitive M&A environment. In studio this week, we have a seasoned deal facilitator and an intrepid researcher and advisor to give us first-hand views on what's happening and what deals are likely to happen in the year ahead in Africa. We kick off with the deals of the week globally and locally. CFR Pharmaceuticals, Chile's largest drugs maker, has agreed to pay 12.6 billion rand in cash and shares for Adcock Ingram Holdings after months of negotiations. CFR will settle between 51% and 64.3% of the purchase price through cash, and the balance through new CFR shares. Hilton Worldwide, the hotel operator owned by private equity giant Blackstone Group, has filed to raise $1.25 billion in a U.S. initial public offering. The announcement comes as U.S. hospitality shares trade at close to their highest level in 6 years. And JSE-listed fast food restaurant operator Famous Brands announced it would buy 49% of Mr. Biggs, the restaurant arm of UAC of Nigeria. This will bolster its presence in Africa's most populous country. M&A activity in Africa has surged over the last decade, and one can't open a media publication or attend a conference without hearing that plenty of opportunity still beckons in Africa. Joining me to discuss this here in studio, Duncan Bonnett, partner and director at Whitehouse Associates, and Shabir Norath, head of corporate finance at Nedbank Capital. Lovely to have you both here. Welcome.
Thank you.
Duncan, I know you're constantly traveling around crisscrossing the continent. What does your typical month look like? What is it that your clients are wanting you to look at, and what's the impression, the sense that you're getting?
I think the key thing that most of our clients are looking at is that they understand that the current boom in Africa is probably a long-lasting one, and they're now trying to understand what direction it's going to take going forward, where the competition is coming from, because it is becoming a much more competitive space, and how they can best leverage themselves into that space.
So, Shabir, from your perspective, a South African headquartered business, but you yourselves have a presence across the continent. Are you seeing that interest picking up? And what does your grid, your filtering grid look like? What sort of deals or kind of partners are you looking for?
You know, typically, Erica, in the past we used to have just typically South African corporates looking to expand into Africa and being our clients. But of late, you know, our clients are now expanding to be multinationals, companies from Asia, from Europe, from North America. And typically they're looking for acquisition opportunities across the continent. There's significant opportunities in the resource space. Given the state of the mining industry in South Africa, we're finding a number of miners, in particular the junior miners, looking to deploy capital on the continent outside of South Africa. With all of the recent oil and gas discoveries in East Africa, we're seeing a lot of interest from international operators looking to enter into that space.
So could you elaborate on this, Duncan? So we're hearing from Shabir, and I know you agree with us, that mining and resources, the extractive industry, still offer tremendous opportunity. But we've also heard that the African opportunity is one from rapid urbanization, the growth of the middle class. So it almost seems like a conflicting story, or is this a parallel story happening?
Yeah, I don't think there's any conflict in that. I think you know, urbanization has been happening for a long time, but it's now being underpinned by a greater wealth and a greater depth. It's not just urbanization that's unfolding organically. We're also seeing the return of a lot of expats from the African diaspora. If you go to virtually any capital city these days, there are thousands of Ghanaian or Nigerian or Kenyan expats who've come back from Europe or the States, and there's also once again growing expat populations in the mix. So you're seeing the urbanization and the sophistication of markets in Africa being driven by a younger generation who are probably a lot more IT savvy. They've been exposed to global brands, they want them, they have a higher level of disposable income, and that drives a lot of the retail landscape and the urbanization, the housing and so on, and entertainment sectors.
So Shabir, that depth we're seeing, so no longer are the mines just extracting and getting the ore out of the region, perhaps now increasingly you're seeing the value added and the processing and the associated services, the knock-on services occurring within those regions.
Absolutely, there's significant knock-on services. I think the challenge still lies in the lack of infrastructure, especially to evacuate that product out. Most of the Indian and Chinese buyers are looking to acquire simply because they need their resources back home. The lack of infrastructure inhibits the ability for them to get that out.
Now we know there are long lead times with infrastructure. Will this problem be resolved to the investment in infrastructure across the region? And these would be cross-border projects that are necessary, multidisciplinary, many funders. Is this possible? Is it conceivable that it can happen without this implying a continued constraint on growth?
I think there is going to be a continued constraint on growth. I think even if all the governments got together and put in all the capital that's required, it's not going to happen in the short term. We see that on the TMT and the telco side, private companies have stepped in, and largely a lot of the telecos projects have been funded by private companies. On the transportation side and the energy side, a lot of that has been done by government, but there'll always be a constraint for as long as government continues doing that.
Duncan, is that a concern, that all this potential that everyone keeps speaking about will remain to an extent just potential because of the infrastructure limits?
I think yes and no. I think that it's an immediate concern, and it depends largely on where I think global commodity prices end up. You're not going to, as a major resource company, spend $3 or $4 billion building a railway and a port to get your ore to the coastline if you're not confident that over the next 10 to 15 to 20 years that resource is going to be wanted. So there is that uncertainty. But I think what you're also seeing in countries like Mozambique, Tanzania, and others is that the private sector is more willing now to start self-funding that infrastructure backlog. To a degree. It does require obviously participation of the state, of donors, of finance houses, but there is a move to a more shared approach to infrastructure delivery.
So Duncan, we've had the announcement that Famous Brands is doing this major acquisition in Nigeria. Is this, rather, let me put it this way, what does the typical deal maker or seeking deal maker look like? How prominent are South Africans in this group?
I think, South African companies obviously have had their traditional strengths in the rest of the continent. With something like the Mr. Biggs deal in Nigeria, for me it was something that has been waiting to happen. You've got a native brand in Nigeria that is slowly starting to spread into the rest of West Africa that was looking for a bigger partner. The fact that Famous Brands has got involved is probably, from a South African perspective, quite a positive thing. It will lead to a lot more exports of our goods and services into Nigeria from that perspective. It also allows that group, the Mr. Biggs group, access to the South African expertise, perhaps a little bit more financial clout, to be able to expand into other markets that they haven't been in before. So I think that's really, from our perspective, the types of companies that we're seeing. Famous Brands, obviously ShopRite have expanded their presence across the region. We've seen other South African companies that have also expanded largely in the FMCG space, not to forget banking and financial services, but that's really where we've seen it. And I think there are a couple of other gaps that need to be filled sooner rather than later.
Yes. So perhaps you're being rather polite about that. Shabir, let me ask you, who are you encountering in the deal-making space? So are South Africans hungry as, say, the Europeans and the Chinese and the Brazilians?
I don't think there's a client that I've seen this year who hasn't asked me, show me acquisitions in the continent. I think pretty much all our clients are saying South Africa is largely mature and the growth is coming in the continent. Private equity firms, for example, who can't find the growth in their own jurisdictions in North America and Europe are all very hungry to come into Africa. So the corporates are competing, the private equity houses are competing. Everybody seems to be looking at Africa to say, well, that's where the new growth is going to be coming from. We hope it is.
So this is a potential market for those who are growth hungry, as you say. So what about those that are perhaps a bit cautious and conservative? There must be many questions about that too. How would they be able to manage their risk?
Yeah. Those that are more cautious will tend to kind of go into jurisdictions which they understand. So East Africa is probably more closely related to South Africa than, for example, West Africa, largely because the language is similar. The laws are not very much different from South African laws. So those that are conservative or those that are saying we want to expand but we want to go into an easier jurisdiction are looking either at our neighboring countries or looking at East Africa as a first point of entry.
Yes. So referring then to the areas, Duncan, so I've spoken to you before, so you've highlighted two axes on the east coast of Africa and up, and also from Nigeria westwards that you're seeing opportunity there, and then also the Copper Belt.
Yeah, absolutely. And I think that those are, you've almost got an energy corridor from Botswana and Limpopo province of South Africa all the way up the Great Rift through to the emerging oil and coal producers, Mozambique, Tanzania, Uganda, South Sudan, all that way. And that, I think for me, one of the interesting things is that there is this drive within those economies to secure much more local participation in the development of those resources. And I think there's a lot of opportunity there to start establishing footprints either through direct investment or M&A activity into things like engineering companies, supply houses, that kind of an environment. And obviously in the Copper Belt as well, both sides of the border. It's, there is a lot of cross-shareholding of mining companies in both the Congolese and the Zambian sides. And it is becoming not an integrated business environment, but one where you can service across the border. So that's becoming a very exciting area. And I think not just from the mining side, but because a lot of this development in the Copper Belt and in the emerging oil and gas and coal producers are stranded resources which require this, not just the investment in the infrastructure to ship the dirt out, but to house people, 15, 20, 30,000 workers at a time. You're essentially building towns like we did in South Africa in the 60s and 70s with the Eskom play. Then you're starting to see the same thing happening, and a similar scenario will unfold in Central and East Africa as well.
Shabir, I'm going to end with you. So with this unfolding opportunity, still not at the stage perhaps where opportunities are clear-cut, with many players coming to the region, and I'm asking all our guests this, what are valuations doing in your opinion?
Well, there are some risks in terms of valuation. There seems to be this disconnect between local investors and international investors, in particular around country risk premiums in terms of expected growth rates. And until that is kind of resolved, I think there will be this disparity in the short term.
Duncan, a quick comment from your side on valuations, pricing?
Yeah, I think Shabir is absolutely spot on. Perhaps people who are comfortable and familiar with having grown up and operated in a market perceive the risk to be a lot lower than those who are unfamiliar with the market. And that's where the disconnect comes in.
Indeed. Shabir and Duncan, thank you. It's been lovely hosting you here. My guests were Duncan Bonnett from Whitehouse Associates and Shabir Norath from Nedbank Capital. And that's a wrap of this edition of Deal Flow. We'll see you same time next week. Goodbye.